Hello everybody, Michael here. Welcome to day 9. In today's video, we're going to kind of do a little bit of a recap because I've had a few questions, and specifically about support and resistance and trend lines. And I really don't want you guys to mess this one up because, like I said in the chat, if I was asked, in your trading, if you had one indicator to choose, or one concept, what would you choose? Would you choose the MACD? RSI, what would you choose? And I would say none of those. It would be support and resistance. That is, I never place a trade. I never place a stop loss. I never place a take profit without first identifying where the support and resistance is. So two quick things, two basic concepts to kind of nail home before we look at the chart is what makes the price of Bitcoin move up and down, or any market. What makes the price move up and down? Price moves up when people buy it. Why? Because there's less of it out there. If people are buying it up, there's less supply out there. It becomes more valuable. Think of it like pieces of gold. Why is gold, worth so much, or why are diamonds worth so much? Well, because they're rare. There's not a lot of them out there, as opposed to a metal that there is a lot. If everybody sold all their gold at once, and all these retailers have this overwhelming supply of gold, well, gold will be a lot cheaper. If everybody buys it up, it's going to be a lot more expensive. Same with Bitcoin, the same with any market. Price goes up when people buy because there's less supply, there's less Bitcoin available. Price goes down when people sell because there's more, or there's more available out there to buy. So it'd be less valuable essentially. So that's the first thing. So keep in mind that when you see price moving up and down, that is because millions of people around the world using millions of dollars are buying, causing price to go up, or selling, causing price to go down. So support and resistance. An easy way to think about it is, let's use oil, for example. Let's say today oil is worth, let's say oil was up at $100. It just keeps dropping and dropping and dropping, and it gets down to $40 a barrel. I'm just making up some number. Let's say it gets down to $40 a barrel, and then from there it goes up. What does that say to us? That says that when price got to $40, people like us or businesses were like, hey, you know what? $40 a barrel, I'll pay that. That's a good value. That's a good price. I'm willing to pay that. So millions of people using millions of dollars buy oil because they see $40 as a really good price. And when they buy it, it causes price to go up. So when it rallies up and it starts to come back down to $40 again, let's say it goes up to $50 tomorrow, and then the next day it starts to come back down again, it's at $45. We would think that based on history, well, if it got near $40, there's a good chance that those same millions of people are going to say, hey, that's a good price. I'm going to buy again, and cause price to go up. So the people in the market are creating support because they see that price as a good price to buy at. The same with sellers. Price gets up to a certain point, it drops down. Based on that history, we can assume that if price gets up there again, that people all over the world are going to want to sell again, like they did in times past. They're going to want to sell at that price, which again, remember, selling it is going to cause it to go down. Buying is going to cause it to go up. So when oil, still for example, when oil went from 40 and then it went up to 50, and then all of a sudden it stopped going up at 50 and started to come back down, that's because all those people at $50 said, hey, I bought at 40, I'm going to sell it at 50 now. I'm going to take my profits, I'm going to sell. Well, now there's a lot more oil out there, there's a lot more supply, so it causes price to go down. So when we look at a chart, we see this in the candles moving up and down. And we look for areas where price has came down and bounced off of it, or came up and got rejected from it. And that tells us that those areas are areas to pay attention to. So let me pull up a chart real quick. So this is Bitcoin I'm on the 8-hour just so I can see from the all-time high, almost till today, but I didn't want to do the daily. And you can do this on any time frame. There's going to be the support and resistance that you find on lower time frames are not going to be as strong and are going to be more easily broken as opposed to a support and resistance that you would find on a daily 8-hour, 12-hour time frame. So just looking at this chart, I'm going to point out some areas where price has came to, and I'm going to look for support first. So just look at this area, and keeping in mind that they're not exact prices, they're zones. We could even say this whole area, and there's some over here as well. Look at these areas where price came down to, and people in the market said, hey, you know what is this on average? I would say it's right below 6K. I don't have my, let's close this. So right here, yeah, right around 5,800. So that means Bitcoin came down to 5,800. Millions of people with millions of dollars said, hey, Bitcoin for 5,800, that's a good price. I am willing to pay that. I am willing to buy Bitcoin at that price, and I'm going to start buying now. And when that happens on a large scale, price begins to move up. So I'm going to plot a line right here, just in this area. So we see, and I'll make it a little bigger. Price came down here, and people said, hey, I want to buy, I love that price. I think that's a good value. I think that's a good, you go to the supermarket, you go to your store, you see something on sale, you're like, hey, that's a good price. I'm willing to pay for that. I'm willing to pay that price for that item, and you buy it. So, what determines kind of prices in our economy out in, the stores and stuff is what are people willing to pay for something, and what are they not willing to pay? So, you have departments and corporations that decide, what prices are going to be based on what people are going to pay for it. If I have my whatever I'm selling, if I have it at a certain price and there's just overwhelming demand for it, and I can't keep it on the shelf, well, I could probably raise my prices up a little bit, and you got to find that sweet spot of where can I raise my prices to where I still have high demand for it, and not that, and there's not a lot of people out there saying, I don't want to pay that for it. So in Bitcoin's example, it came down here, and there was a lot of demand for Bitcoin at this price. A lot of people came in and said, I'm willing to pay that price. And when buyers come in and buy, there's less Bitcoin available now, price goes up. We see it came down here again, and the same thing. People like us would look at a chart and say, hey, you know what? Buyers came in at this point. They even came in right here, and they were willing to buy at that price. I'm going to bank on that again. I think buyers like me, because I'm going to be a one buying too. So I think there's going to be millions of other people thinking just like me, or even institutions or rich people thinking just like me. And they're going to buy at this spot, and we're all going to do it. We basically create it ourselves. We create the support by all of us thinking alike, thinking, hey, you know what? This is a good value for it. So it comes back down. We all buy in again, causes it to go up. It comes back down. We all buy in again, comes back up. And then eventually what happens is people will, because there is this theory that each time price hits a support area, that support becomes weaker. And I can kind of understand that to an extent, because as price bounces off of it a few times, when it gets to like its third and fourth bounce, I'm starting to think, hey, this might break eventually, and I don't want to get caught with my buy order right here and then it breaks down. And millions of other people start thinking like that too. So the support becomes weak because there's not as many people willing to buy. Look at when it first came down, it bounced up to here. Then it came down again, it was only able to bounce up to here. So that means less people bought here than they bought here. There was more people buying here, causing price. There was more money coming in here, going up here. There was less money coming in here to go up here. There was even less here. So we can see the support is getting weaker and weaker because less people are buying. And we see that reflected by how high price went. And you could really see this is that's why descending triangles, which is what this is, or you could probably even just draw it. More in this area. That's why descending triangles tend to break down, because less people came in here, causing price to go up lower than it did right here and it did right here. And then it only went up this far, and then it barely even came up at all to right here before it, you know what, when it got to this support again, there wasn't enough buyers at all to even hold it there. So it's the same thing with resistance. Price comes up to a certain point. Let's look. Let me find one here. We'll do this one. And these aren't perfect. You know, I would go in and adjust these. So the same thing with resistance is price comes up to a certain point and people say, hey, I think this is a good spot to sell it at. I want to take my profits. People would have their take profits actually set in areas like this. So when price came up there, sell orders began to get filled. People began to take their profits. When that happens on a large scale, selling means there's more Bitcoin available, causes price to then come down. So it happened here. It happened here. It kind of broke through, but people still continue to sell even afterwards, and it caused price to come down. If we really even zoom in right here, you can see it came up and came down. Here it came up and came down. It was never really a strong move from it, but it's the same concept of support. Is when price comes up to a certain area, that history has shown us that when it does come up there, it bounces down from it. That means a bunch of sellers came in and said that they were willing to sell the Bitcoin they had at that price back into USD or whatever. You know, they want to convert it back. They want to take their profits at this point. Support is those people in USD see price coming down to a level and they say, hey, that's a good value. That's a good price. I'm willing to pay that. They buy into it, causing price to go up. So I hope that makes a little bit more sense. So we plot these by looking on the chart, and as you get more comfortable and familiar with looking at the charts, they'll kind of just pop out to you. You know, we could say that there's one down here because price never went below it. Buyers came in at this point and said, we are willing to definitely pay $3,130 for Bitcoin, and they continued to buy it, causing price to go up. They were like, you know what, that's a great price. We're going to buy there. We can see after this big drop in the market, when everything kind of crashed, to start this recession, price came, everybody panicked. You know, the stock market started to crash. Everybody was freaking out, and they're like, hey, you know, we want to get back in USD. There was a massive sell-off in the market, leaving, putting way more Bitcoin out there and available, caused price to come down. But then people seen it come down to here and were like, hey, that's a great price. I am willing to pay $3,800 for it. And they started buying in, and we can see that reflected here in the volume. Volume is the amount of money being traded at a certain time. So we can see here, this long red candle here was the big sell-off, but then another strong, pretty big green one where people came back in and said, hey, I'm willing to pay that. I'm going to buy it. And people have been willing to buy at higher lows, so it came down here, came up, came back down, and people are like, hey, I'm still willing to buy here at 4,500. Came up, came down here, they're willing to pay 5,700. Came up, came back down, they're willing to pay 5,900. And now we're up to a spot where support here, because you got to think about it like this as well, is support areas, once they're broken, they can turn into resistance. And resistance areas, once they're broken, can turn into support. So they can flip-flop. So let's see if I can find an example. So like this line here, for example, we see price came up to it and was rejected. It was resistance. Sellers came in and said, hey, we want to take our profits here. It was rejected. But then if we look over here, price came down to it and buyers came in and said, hey, we like that price. We're going to buy. And it bounced it up. Not real high. Well, it bounced it up, 500, 400, 500 bucks. But buyers came in. So this support or this resistance, where it was resistance here, has turned into support. So they can flip-flop, based on what side of it you're on. I don't have a lot of them drawn, but we can see. So yeah, we can see it was support here, but it was also resistance here. So this same concept can be applied to trend lines. And you draw them just by, it kind of just visualizing where things, are trending. So like the one I drew earlier, I can draw one from here and just start drawing lines and try to connect points. Try to get as many touches as you can. Try to get different, try to get price to touch your line as many times. So we can see that the same with support, horizontal support and resistance, trend lines become support and resistance. Where it came up, it sold off. It came up, it sold off. It came up, sold off. Came up here and eventually sold off. So these become diagonal support and resistance, where once this trend starts to form, so we have this point touching, this point touching. Let's say I'm a buyer and I bought in down here because we know that this was support down here. So we bought in. As price came up here, we have our line drawn. Millions of people all over the world have this line drawn. And when it gets up to it, they say, hey, you know what? It bounced off of it here. People were willing to sell at this point, take their profits. Chances are they're probably going to do it again when it gets near here. And before it even touched it, people started selling off real quick, caused it to come down. Then it moved along and then it squeezed up here and touched it again. And we already have this line drawn because, let's say, look over there at it. Price is only right here at this point. We have this line drawn before it even comes back up because we've drawn it larger than, longer than what we are able to see already, So we have this line, extended. But I shortened it up because it eventually ended at this point. But we have it extended farther than when price is, so we can see in the future where it's going to come up to it at. So it's the same thing as support and resistance is when price comes up to it, or if it's a support trend line, when price comes down to it, buyers come in and say, hey, buyers in the past, when it got near this line, they were willing to buy here. Chances are they're going to do it again. Let's see what happens. So let's look at the most recent thing that's going on. And we just really had, one of them broken. So I don't know exactly where they're supposed to be, but I'm going to start drawing some lines to see what it looks like. So we did have it right here. And it was just broken. So kind of like this. Price came down to it. Buyer said, hey, I'm willing to buy here. So at this point, because we need two major touches for it to happen, because if there's only one touch to it, well, you can't draw the line, not until you have the second touch. So at this point, we would then have our line drawn. We would be connecting this touch to this touch. So when price came down to it, we would say, hey, when it came down to this line last time, buyers were willing to come in and pay that price, causing price to go up. So when it comes down here again, I'm going to jump in. I'm going to buy like everybody else, causes price to come up. At this point, I even placed a buy in this area, but it was eventually broken. And now we don't really have a trend on this time frame. We don't really have a trend line we can draw from price right here. We have support and resistance. We know that this area right here is kind of support. It's support for price now, but we can see here it was resistance. Price came up to it, bounced around underneath it, and those sellers, people kept selling, and eventually the buyers who were holding price up became weak. The sellers came in and drove price down. It kind of happened here a little bit. The buyers got too strong, pushed price up, and now we're back at it again, right around 6,800, and we're hovering on it. So right now, what this means is There's people looking at the support, millions of people, millions of dollars looking at the support saying, hey, it's been resistance. We know it's support. We want to buy here. We're willing to buy here because we think it's support. I think it's support. I'm willing to buy here, which is holding price up. But there's also sellers right above it who are still taking their profits and wanting to sell. So that's why we kind of have this battle going on. Which way is it going to go? Which one's going to, outmuscle the other one? And that's what we're, waiting to see. But right now, with it, being a holiday weekend, a lot of the big money's probably not trading right now. The institutions, a lot of people, are just out with their family. They're not really sitting on the computer trading. So we don't see a lot of big movements because a lot of the big money's not even at play right now. It's just little guys like us making price move right now. So there's not a lot of movement. But I think come Monday, when the larger institutions and the bigger money gets back involved, whatever they decide is which way it's going to go. So I'm going to kind of hold off and wait till Monday. They could decide, hey, that's support. I'm willing to pay that and send price up. Or they could be holding their Bitcoin over the holiday weekend, come in and say, hey, I want to take my profits and I want to sell right now, and it could send price plummeting down. And we would say the next level would be probably around here. We could say this was support because price came down to it, bounced off, came down, bounced off, right around 6,700. If that broke, then I would say the next level would be around 6,500 because it was resistance here. So we know people are going to think, well, that was resistance at one point. It's going to turn into support. So just people coming in and buying at this level right here will make this be support. It will create it into support. And then at some point it's going to hold and then continue back up. Just wherever all those millions of people and millions of dollars decide this is the price they're willing to pay for it. Whenever they finally decide that, and they all agree, not sitting in front of each other agreeing, but we all kind of come to a consensus that, hey, this is a great price. We're willing to pay this price. Whenever that happens on a mass scale, then price will go back up. So I hope this clears things up a little bit. When you're drawing your trend lines, really, you just get the line out and start drawing. Start looking for spots, You can draw from here. This was a trend line at first, bouncing off of it. When this was playing out, this was a trend line at first before it was broken. Let's go down to a lower time frame. This was almost kind of like a little trend line right here. Price was coming up, bouncing off of it. Let's see if I can find one more. They're going to be everywhere. This was a little trending area for a little while. Price was coming up to it. Sellers were willing to take their profits at this point over and over and over. Then buyers came in on multiple occasions here. And were willing to, here they were willing to pay that price. They're like, I'm willing to pay that price, send price up. And the sellers come in and say, hey, I want to take my profits, send price down. Buyers come back in. They're willing to pay that price, sending price back up. So just start drawing your lines. And then over time, you will just get comfortable and you'll be able to spot them a lot easier because they're just going to be kind of all over the chart. Yeah, that's kind of a bad one. We could do this. Could do, this is a little trend line. See what I'm doing here? They're all over the place. And these areas act as resistance here. They act as support here, resistance here. And you can use these for your stop losses and your take profits. Let's say you came in and you bought down here. Where are you going to set your take profit at? where this trend line would say, hey, you know what? Sellers came in and they were willing to sell and take their profits there. Well, I'm going to take my profits near there too. Or your stop loss. Say, for some reason you had a buy order somewhere around here, then you would set your stop loss above this, because if the trend line's coming down, you think it would be rejected, but if it broke it, well, then it's going to reverse. So you would set your stop loss on the opposite side of support or the opposite side of resistance. So I don't want to make this video real long. I think I explained it a little bit better. If you're having trouble with the trend lines, just start drawing them, and then you'll start to visualize them. You'll start to see them. Like, there's times that I don't even have to draw them on the chart because I just see where they are and I know where price is going to react to before it even gets there. So it's just something that comes with practice and being able to visualize them on the chart. So I hope this helps. Yeah, let me know what you think about it in the free chat, and I will see you guys later.